What's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. So in this video we're going to do another trade breakdown, as well as it is back, the $100 crypto giveaways. So we're going to be giving away $100 worth of cryptocurrency based off of this trade right here. All right, all you have to do to enter: subscribe to the YouTube channel, leave a like on this video. All right, follow me on Instagram at Trillionaire Mac, as well as click the $100 crypto giveaway link in the description down below. You just have to put in a few bits of information, your name and your email, so we can contact you, whoever's randomly selected, right? And like I said, guys, this is not me selecting the winners. We simply just put it inside of a random selector, and then we select a few of you guys. We might actually do like 2 or 3 this video as well. So be sure to leave a like, subscribe to the channel, follow me on Instagram, and fill out that form in order to be entered and selected, all right? Because, you know, we have to be able to contact you to give you your crypto. All right, so we're really just gonna start out on the M15 time frame. Recently, my trading has really incorporated M15 zones, M15 supply and demand zones. It's what I've like, or what I like to trade, especially recently. Let's go to the M5 really quickly. I just wanna see what's over here now that I'm looking at it. I wanna see what's over here in this area. Let's see. I just want to see if we touch this here. We wick into it. Okay, not quite. Okay, I was just curious. Okay, so in this video on this trade, we're going to be breaking down EURUSD trade that took place during London session. Now, London session has been giving excellent moves as of recently. As you guys can see, you know, we're kind of pushing, you know, 10 o'clock right now, and we still haven't had, you know, a great move. Oh, a move might be loading here, guys. I may have actually missed it now, but it's completely fine. We caught 12.1% this morning. But London session was pretty good this morning. Like I said, we're going to start off on the M15 time frame. We see that price is pulled into a supply zone here. Now, on the H4 in the daily time frame, we understand our expectational order flow. We know exactly where we're headed. We know where we're going. And it makes it really easy to trade everything else, right? So we really don't have to spend too much time on those higher time frames. And really, I know what you guys want. You guys are wanting the entry. So let's go ahead and go to the lower time frame. I actually took my entry on the 2 minute this time. It was a little more clear. You can still see everything on the 1 minute, but it was just a little extra bits of structure internally. Okay, that could have been confusing. On the 1 minute time frame, your entire, you know, change of character actually took place here, okay? But your supply demand flip took place here and finished here, right? So it was slightly different. And I know those of you who don't trade my style, who aren't a part of my mentorship program, you probably don't know what I'm talking about. But no worries. If you continue to watch the content on this YouTube channel, if you continue to look at entries, if you continue to look at trade breakdowns, you're going to figure it out. I promise you it will happen. I promise you, I promise you, I promise you. Now, those of you who would like to become more efficient on the charts, more effective on the charts, and who do want, you know, someone to take them hand by hand and show them what actually takes place within the market so you don't have to figure it out by yourself, that is what I'm for. That is what Trillionaire Mac Trades Telegram channel is for. That is what my mentorship program is for. That is what one-on-one sessions are for. Right now, if you aren't a part of my mentorship program and you would like one-on-one sessions, feel free to click the link in the description. Check it out. If you are part of my mentorship program, you guys get free one-on-one sessions. You can sign up for as many as you want. And I have students who literally sign up for sessions every single day if they're able to. Right? So make sure, if you are a student and you're watching this video, make sure you take advantage of the mentorship sessions, one-on-one sessions, things like that. I mean, I know you guys are. We're pretty much booked every week. And I just want to say thank you. I really appreciate you guys. So like I said, the 1 minute time frame had a little bit going on as it relates to internal liquidity, internal structure, things like that. The 2 minute was super clear, right? It was very, very clear. So as we could see, we had a push to the upside, push to the downside, push back to the upside. Okay, so we broke structure to the upside, and then right after that, we had broken structure to the downside. And we also had a demand failure here, right? Now, you can really see the demand failure on demand failure was here actually. So we had a reaction, failed reaction, and then we traded through. So the demand failure was here, the flip was here, break of structure to the upside was here, and the change of expectational order flow also took place. So here are all the confluences. Let's go on the 1 minute and actually look at this supply and demand flip. Yeah, on the 1 minute time frame, it was just a little confusing because you have this here, and then you have it was just a little, you know, a lot going on, I would say. It's normally very clear. So this had to be deciphered just a little bit, but still no worries, right? The same exact stuff that takes place over and over and over again, right? So we're at a supply. We're looking for a change of expectational order flow. We look for all of our confluences of demand failing, supply being respected, and we use those confluences together to take a proper entry here, right? Now, you could have taken more entries if we look here. So you could have taken more entries, actually. I did not, but this is always great to look for, you know, the next entry. So we had a break of structure to the downside here. All right. And what was responsible for that? We know that we have some, I would use this candle here. We know that we have some type of supply here. So like I said, I did not necessarily take this. All right, and really, oh, you know what, guys? No. I was looking for price to come back here, actually. I remember now. Sorry, guys. After a certain amount of time, once I got 1 to 4 in profit, once I was up like 8 pips, I set this to risk-free, and I went back to sleep because my time session is Eastern Standard Time. So once we were right here. So I went to sleep at like 5:46 in the morning, and yeah, I didn't even wake up for New York session. And as we can see, you know, not bad that I didn't, because we're starting to get a push to the upside here, but I'm probably going to miss this trade because I'm not prepared for it at all. And I'm currently making a video, so no worries. Got 12% already. So I was looking for price to trade back to this area here, right? Mainly because we have a liquidity point of interest, right? So price can easily, like if I end up taking a buy down here, like let's say I get another opportunity outside of this one here, which I can see now, right? If I get another opportunity, let's see. No, we're not ready for an entry yet, actually. We're still waiting. But if I get another opportunity to take a buy, or if I get an opportunity to take a buy position, I'm going to take that buy position to this point here. We have perfect inducement, okay, perfect equal highs throughout this area here, right? We have a liquidity point of interest. We mitigate something to the left, absolutely, because this is where we took our entry, okay, based off of this candle here. So we mitigate something. We also collect liquidity above these highs here. Let's go to the 1 minute time frame so you guys can see it a little better, right? So we grab liquidity, we mitigate something, and we have a nice V reaction here that tells us that price is really reacting to whatever supply and demand is here within this area, right? So this was a perfect liquidity point of interest, and I will be paying attention to it as price develops and comes back to this region here. All right, let's actually change this. I want to make my colors a little darker so they don't blend in as much. Yeah, that's a little better. So yeah, and remember guys, with change of expectational order flow, I use wicks. With breaks of structure, I use actual body candlesticks. With supply and demand, I use body candlesticks as well. That's just a little tidbit for you guys Let me see. Now this inside bar was perfect here. You could have also used this full bullish candle here if you wanted to, but this inside bar is absolutely perfect, right? So with that being said, let's talk about targets now. Targets, as always, you guys already know. If you said swing low, the next swing low or swing high, you're absolutely right. Now, eventually, I will get better and more comfortable with trading from zone to zone. So eventually, I'll look to take profit, you know, at this demand zone here, or that's already been mitigated. So maybe this one here, and we have a little bit of inducement here, right? That goes to break internal structure, that then goes to break swing structure, right? So eventually, yes, I will get more comfortable with taking zone to zone, but right now, you know, I'm really just looking for the swing low to be taken based on my trading plan, based on my back testing. I know that that's very doable. I know that that takes place very often, and I know it's high probability, right? Which is all you're doing when it comes to trading. You're just simply trading probabilities, and you're trying to end up on the more probable side of the market by looking at the confluences that are taking place. right? Like in basketball or in football, for example, if I see that most of the defenders are lining up on one side of the ball, right? And I see, um, three wide receivers on the right side, right? That could be telling me that, probability wise, there's a probability that they're either going to stack on one side to distract everyone and then sweep to the other side, right? And this is just American football. Or that tells me that, we just need to play man to man coverage because the probability that they're going to throw the ball deep is going to be high. And then we have um, our linebackers and our inside safety to protect for any running back sweeps, right? You're just playing probabilities. It's really the same thing with trading. Now, those of you who don't understand American football, because I know I have a lot of international traders who trade with me and a lot of international clients, basically all you have to understand is that you're playing probabilities. So if we get this schematic here at a supply zone with the H4 and the daily time frame in our favor as it relates to what's going on, right? And by in our favor, I don't necessarily mean, so this is going to turn into a little bit of teaching, but oh well. So in our favor, I don't necessarily mean, prices trending to the downside on the H4, the daily, and the M15. That's not really what I mean. What I mean is, because on EURUSD, we kind of talked about this yesterday, but on EURUSD, we had a change of character on the daily time frame, and price is currently bullish, right? But we're on a bearish leg, and we're looking for a retracement below our equilibrium zone. So if our equilibrium is here, right, this would be expensive pricing within this region, and then this would be discount pricing within this region here, right? So we're waiting for price to push into discount so we can take advantage of a buy position here. All right, we understand that. On the H4, all right, we are within a downtrend leg here. We already had a pullback. The pullback was here. Now we are back in our downtrend leg. So we just caught, for example, this move here. Okay, and all of this is located here. So on the M15, right, we're going to be catching, if price was trending up from here, right, we're going to be catching the push of price to the downside, which would be here, right? It's all about knowing how to correlate the time frames together. And that's really where my structure teaching also comes into play. Like when I put you guys on to the types of structure that I use, why I use it, it really changed trading for a lot of my students, and I know it'll change trading for you as well. So if you guys have any questions about that, feel free to hit me up. Now, I'm not going to let this ramble on too long. We risked 2 pips on this trade, targeted 24.2 for a 12.1% gain. Not a bad week at all. We did not get a confirmation entry. My confirmation entry was here, right? So the entry I was going to send out to the group this morning was right here. So Telegram channel this week, we are still up around 6%, so not bad at all. We probably won't take any more trades this week unless it's Bitcoin, BTC, USD, which should give us another 5 to 6% this coming weekend, right? But with that being said, I'm going to go ahead and wrap this up here. Beautiful trade overall. All right, I am looking for price to fulfill my daily. I am looking for price to fulfill this daily push to the downside. I will be clearing my my charts as well. We have a lot of things going on, but I am looking for price to move to the downside to this point right here. We can see we just had a huge exhaustion wick on the H4 time frame. Now price can still push to the upside. As you guys can see, we had a huge exhaustion wick here as well, right? And then price still continued to push. So we could still continue to push to the upside. We could possibly come up here before we roll back back to the downside. And then this could be used as some type of inducement, possibly. I mean, it just depends on how you're looking at things. Maybe we have some demand here, inducement, price run through, but until we tap this zone here, right? Which is also in discounted pricing, as you guys can see. So with that being said, I'm going to go ahead and wrap this up here. Much love. Thank you guys for leaving a like on the video, subscribing to the YouTube channel, much appreciated. And make sure you guys apply for that crypto giveaway, because we will be giving away at least one $100 giveaway, but we might do like 2 or 3. All right, this was a very, very good trade. All right, it wasn't like 5% or anything. It was 12.1%, so not bad. So with that being said, I'll catch you guys on the next video. Peace out.